Okay, welcome back subscribers. Promised you I'd talk about the Aussie dollar. Thank the Courier Mail for this little chart here. And we have here the Australian dollar versus the US dollar since 1969, shortly after decimalisation. Before that, Australia was a pound currency. In the late 60s they turned into a decimal currency, and then it makes sense to track it against the US dollar. One of the interesting things about Australia is the fifth largest traded currency in the world. Even though it's not the fifth largest economy, the reason it attracts so much attention as a currency is the stability of the government, and it's a resource-backed commodity currency, and that all the commodities we sell, iron, coal, uranium, bauxite, which makes aluminium, all that sort of stuff, because we have so many resources of that nature and they're export driven. It's what they call a resource currency. Here's the previous high. Remember a couple of videos ago I talked about Nixon taking the US off the gold standard in 1971. Didn't happen instantly, but you can see here 3 years later is the high of the US dollar versus the Australian dollar, and the US dollar went to 148. So the US dollar was at its lowest value against the Australian dollar February 1974. Australian dollar was eventually floated, and in the 80s, then it dropped, stayed below the US dollar. It reached its record low in 2001. We'll get there, and that was 48 cents, 48 Australian cents to the US dollar. There we go. Australian dollar reaches record low, 48.9 cents, and that was March 2001. Shortly thereafter we had September 11, and since that time the US has been inflating its currency, and there we get this rise, continued rise, then almost parity, and then the global financial crisis comes along and demand for resources drops, and we go quite low again. Unfortunately for Australians, this is low in the currency also reflected a low in the price of silver. But the problem is, of course, your currency is worth half the value of the US dollar. You're paying double the price for silver. So whereas Americans bought their silver then would have been making a bargain, Australians buying their silver then, while they were getting a good deal, weren't getting the same advantage, because they were buying with the impacts of a low dollar. We've since seen the Australian dollar climb. The last part of this chart is the months in 2010, and it reached parity for a few seconds and has since come back. Why is that important in relation to silver? Because as the silver price is quoted in US dollars, it affects when you buy silver, whether you're getting a real bargain. It's important to watch that dollar value. For example, if in the next 6 months you believe the Australian dollar was going to go up to $1.40, for example, against the US, but silver was going to stay the same, you'd actually be better sitting off and then buying more silver with your more valuable Australian dollar. But I believe if you look at the history of the price of silver and the history of the Australian dollar, you'll often find a correlation between it, because silver's a resource. Likewise gold, uranium, iron. If you factored all those metals and resources in, you'd see very close correlation between that and the value of our dollar. Our Treasurer Wayne Swan has said he's not going to intervene to deliberately make our dollar worth less. They've already increased liquidity after the global financial crisis by spending billions of dollars on schools, home insulation, lots of other things to put money out into the economy, even giving Australians a direct $900 payment, part of increasing the liquidity, the amount of a bit of quantitative easing for the Australian economy. So there we go. Here's a quick look at the Australian dollar. I'm not an expert on currency trading, never given it a go and not really intending to, but it does impact on silver, so thought I'd give it a quick mention. Thanks for watching. Hope you enjoyed the video and hope it helps.